I'll go on to highlight specifically on coronavirus, with the Bank of Canada saying it is likely that as the virus spreads, business and consumer confidence will deteriorate, further depressing activity. And the Bank of Canada is saying the outlook is clearly weaker now than it was in January. We're looking at the Canadian dollar right now at 74.79 against the U.S. dollar, and we want to get a little bit more insight into this decision. Joining us here in studio is Francis Donald, Chief Economist at Manulife Investment Management. Francis, thanks for being here. What's your immediate reaction to the Bank of Canada's move?
We are in extraordinary times. We are living through history that will end up in textbooks and case studies as we analyze central bank policy, how effective it is, how quickly central banks should be reacting, and whether or not we look back and say they acted too late, too early, or right on time. 50 basis points is a very strong message from the Bank of Canada. They are clearly concerned about downside risks, but I suspect that this is in conjunction with globally coordinated rate cuts. The Reserve Bank of Australia, the Federal Reserve has cut. We will continue to see global central banks preemptively react to the downside risks created by the coronavirus and what it will do to economic growth this year.
For those just joining us, the Bank of Canada has just cut 0.5 percentage point from its benchmark interest rate, easing monetary policy in this country for the first time in more than 4 years. And as Francis noted, following the action by the U.S. Federal Reserve yesterday, Francis, I have to ask you, we're always wondering what kind of conversations these central bankers are having behind the scenes, and whether or not the Fed's move yesterday was the kind that just ultimately forced the Bank of Canada's hand, even if perhaps they didn't want to cut by 50 basis points, because there was some chatter in the marketplace that perhaps they didn't want to go this far.
I hope we find out one day what happened on that G7 call with the finance ministers and the central banks, because what we were anticipating is something like we saw during the financial crisis, which is they all meet and then a statement is released after the fact in which everybody responds with their own tools. What we saw instead was about a 2-hour delay between the statement, which didn't have concrete specifics, the Federal Reserve cutting interest rates. We have the Bank of Canada cutting today. We have the ECB coming up on the 12th. And then, of course, we have the Fed again on the 18th. So I suspect the call was we all need to move, but we also need to move relative to where our economies are. What's interesting here is that Canada will benefit pretty significantly from the Federal Reserve cut by itself. We import a lot of our bond market moves from the United States, and the Fed is really central banker to the world. The Fed is the central banker that will calm financial markets, not the Bank of Canada. So we are getting in, I would say, effectively with the Fed and the 50 basis point cut, even additional easing here.